Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Nutrien stock so we can determine if it's a buy or a sell. Nutrien produces potash. 95% of potash is used in fertilizers to support plant growth, increase crop yield, and preserve water. It is also used in manufacturing potassium-based chemicals for things like detergents and ceramics. Nutrien is the largest producer of potash and the third largest producer of nitrogen fertilizer in the world. They have 1,500 retail stores. The company was formed through the merger of Potash Corp and Agrium. Nutrien's headquarters are in Saskatoon, Saskatchewan, Canada, and it was founded in 2018. Let's get started with the model. This is a large cap company, 35 billion market cap. They're trading at $69 a share, and they have 500 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. This is correct. They did have the same amount of free cash flow in 2019 and 2020. It increased a little in 2021. Then it blew up in 2022, 5.7 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. That increased a lot as well, from $500 million in 2020 to 7.7 billion in 2022. Revenue is the sales for the company, and that went up from 20 billion to 38 billion. Since they're a commodity-linked business, their revenue and profits are highly dependent on the price of potash. Let's look at the capital structure. 26 billion of equity, 12 billion of debt. They're 68% equity, 32% debt. Their net debt is 11 billion, and their WACC, weighted average cost of capital, is 12.3%. And that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year for. That's 47 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of $43 billion. We divide that by 500 million shares. And we get a calculated stock price of $86. They're trading at $69, so they're trading at a 20% discount. It's a buy according to the model. I did a video on this company back in June 2022, so a little less than a year ago. And they were trading at 86. I calculated 54. They have come down since that point. They've come down to 69. But ironically, now I'm calculating their stock price at 86. So now it looks like they're undervalued. Last year it looks like they were overvalued. Simply Wall Street is a lot higher than me. They're at 113. They say they're 38% undervalued. 16 analysts priced this stock, and the average price target is $90. The low is 70, the high is 110. Another 7 analysts priced this stock, and the average price target is 87. They're saying it's 26% undervalued. This is where the stock has been trading since they IPO'd. So it looks like they started out pretty high at about $55 a share. And then when COVID hit, the stock fell to about 31, 32 at the low. And then look at that run up since then. About $120 a share at its peak, which I think is way too high for this stock. It has come back down to reality, but it's still trading a ton higher than what it was pre-COVID. They pay a pretty generous dividend, a yield of 3%. To calculate the dividend yield, you take their last dividend payment, multiply it by 4, so 53 cents times 4 is $2.12. You take that number and divide by the stock price. That's how you get to 3%. Which is 19% of their free cash flow, 14% of their net income. There are 16 companies in the same industry as Nutrien. Nutrien's dividend is average. Look at the dividends of these two companies, 21%, 15%. These are correct. I did confirm these numbers. But I don't think the yield can stay at these levels. Nutrien ranks second in market cap at 35 billion. The average is 8.6 billion. The median is 750 million. They have amazing price multiples. Price to book of 1.3, a lot better than median and average. PE of 4.5, price to free cash flow of 6.1, and a price to sales below 1, so their revenue is higher than their market cap. So to summarize, I have them trading at a 20% discount. I rank their free cash flows and revenue 9 out of 10. Their ratio is 10 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation, or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.